Did you know that 90% of stock market traders lose money? And it's not because they don't know how to pick stocks. It's because they don't know how to manage risk. Today, I'm going to show you why risk management, not stock picking, not market timing, is the most important skill if you ever want to survive and succeed in the market. And stick with me till the end, because I'll also reveal 3 risk management techniques that even professional traders swear by, but almost no one talks about. When people hear the word risk management, they often think of something boring. But in reality, risk management is your financial seatbelt. Imagine driving a supercar at 300 kilometers per hour, without brakes. That's exactly how most new traders enter the market. Risk management simply means, how much can I lose if I'm wrong? How do I stay alive for the next trade? It's not about avoiding losses. Losses are natural. It's about controlling them. In fact, even legendary traders like Warren Buffett, Paul Tudor Jones, and Ray Dalio made credit risk management, not stock picking, as their survival strategy. In a minute, I'll share what Paul Tudor Jones says is his #1 trading rule. Most people lose money because they chase rewards but forget risks. Think about it. When you see a stock doubling in a week, your brain lights up with excitement. I want that. But what you don't see is the 90% fall that can wipe out your portfolio overnight. During the 2020 market crash, many stocks dropped 60 to 80% in just weeks. Those who had no risk plan lost everything. Those who managed their risk survived and came back stronger. Coming up, I'll give you a powerful method to protect your capital. It's used by the best hedge funds in the world, and you can apply it too. So, how professionals manage risk? Professional traders think differently. They risk small amounts on each trade, often just 1% of their portfolio. They use stop losses religiously. They plan their exit even before entering a trade. Paul Tudor Jones once said, "Don't focus on making money. Focus on protecting what you have." George Soros is another great example. His philosophy? It's not about being right. It's about how much you lose when you're wrong. You see, everyone loses trades. Even the best. But the winners lose small and win big. That's the secret. In just a few minutes, I'll walk you through 3 simple rules you can start using today to become a risk management master. Once you master risk management, the market becomes your playground. Imagine. No more sleepless nights worrying about your investments. No more emotional panic selling. No more gambling. Only smart calculated moves. Risk management gives you peace of mind, consistency, longevity. Without it, the market is like a casino. With it, the market becomes your business. The best part? You don't have to predict the future. You just have to manage your downside. And now, let me give you the 3 golden rules to start mastering this skill today. Rule number 1. Risk only 1 to 2% per trade. Never risk more than 1 to 2% of your portfolio on any single trade. If you're wrong, you live to fight another day. Rule number 2. Always use stop-loss orders. Define your stop-loss before entering the trade, and respect it. The market doesn't care about your emotions. Rule number 3. Accept that losses are normal. Even if you're right only 40 to 50% of the time, you can still make a fortune, if your losses are small and your wins are big. Now you know the real secret of stock market success. It's not about the biggest gains. It's about the smallest losses. If you protect your capital, opportunities will always come. But if you lose it all, it's game over. Start thinking like a professional trader. Start mastering risk management, and trust me, your future self will thank you. If you found this valuable, hit that like button, subscribe for more real-world finance wisdom, and comment below. I will master risk management. Let's build a smarter investing community together.